Hello guys, welcome to today's video. In this beginner's guide, I'll be breaking down candlesticks in the simplest way possible so you can start reading Forex charts like a pro. No complicated patterns, just the basics you need to get started. Let's get into it. So in this tutorial, we shall be using TradingView for our charting, okay? Now, how do we get access to TradingView? You open your browser and then you just type in tradingview.com, all right? Now, the next thing that you are going to do is to get started. You click on get started and then you sign up onto TradingView, but that is not the purpose of this video. I'm going to be teaching you about candlesticks, all right? So I'm just going to go straight into products and then click on super charts. Great. Now we have our charts opened. All right. Now this is a typical example of a candlestick chart. Now what I'm going to do is to shift the chart all the way so that we can get the white screen and then I can give you the basics. All right. I'm going to yeah, all right. So I'm going to leave it here as that. And then I'm going to add a wick to it. Let me just start from here. Okay. Now, when you see something like this on your charts, this is a typical candlestick. Now, here represents a body. You know, the thicker side you see here represents the body of the candle. And the sticks that you see here represents the shadow or the wicks of the candle. These are the two main parts of a candlestick. So we have the body and the wicks, top and bottom. All right. The color of the candlestick doesn't really matter. You can change the color of your candlestick to your preference. But for the purpose of this video, for educational purposes, we are going to make this candle green, and it's going to represent a bullish candle. A bullish candle means price opened lower and closed higher. That is a bullish candle. Price opened at a lower price and closed at a higher price. Now, a bearish candle means price opened at a higher price but closed at a lower price. And we are going to be representing bearish candles with the red color. Fantastic. Now, what does this mean? This means that, now pay attention to the indicators and the price, all right? Looking at these candles that we have here, how do we interpret them? Now, focusing on this green candle, which represents our bullish candle, it means that price what? Opened lower and closed higher. So, that means that, say, this is the open part of the price. So, price opened here, okay, at 1.24. So, we're going to call that the open. That is the open of the candle. This is where price opened. Then it came lower, all right? So it came lower, but it didn't close there. So this is what we call the low of the candle. That is the low of the candle. Now, after coming lower, price then pushed higher to this particular level. So price came all the way here. And so we call that the high. We call that the high. And after reaching this particular level, it didn't close there. The candle melted and closed at this price point. And we refer to this point as the close of the candle. Now that is for bullish candles. So we have the low, the open, the close, and the high for bullish candles. Now, in the case of the bearish candles, we say price opened higher but closed lower. That is the definition of a bearish candle. Price opened higher but closed lower. Now, don't forget, the color of the candlestick doesn't matter, and I will explain. Now, this bearish candle, we say that price opened higher. So price opened at this point. That is the beginning of the body of the candle. All right. Price opened at this point, and so we refer to here as the open of the candle, and pushed high, but then it didn't close there. So after price opened at this point, it pushed to the high, and so here becomes the high of the candle. Now, after pushing to this price point, this high price point, the candle didn't close there. The candle then melted and came all the way down to this particular price point. And that was the lowest that price reached, or the candle reached. And so we refer to it as the low. However, price then came back up and closed at this level. And so here becomes the close of the bearish candle. And that is how we identify bullish and bearish candles. So that is how candlesticks help traders measure the movement of market prices. All right. Now, with candlesticks or candlestick charts, the time frame matters. Any candlestick you see on a chart was formed within the time period of the time frame. Let's zoom into the charts. Now, here is the candlestick chart for GBP USD, and this is on the 15 minutes time frame. All right. Now, that means that any candlestick you see here was formed in 15 minutes. So this bearish candle was formed in 15 minutes. All right. This bearish candle was formed in 15 minutes. This was formed in 15 minutes. This bullish candlestick was also formed in 15 minutes. Now, if we change the time frame for 15 minutes to, let's say, 1 hour, it means this whole candle was formed in 1 hour. This hammer candlestick was also formed in 1 hour. Any candlestick you see here, so if I change the time frame to, say, 1 day, the daily time frame, that means that each candlestick that you are seeing on the chart was formed in 24 hours. Okay, now let's go into the 15 minutes and I'll show you something. Now, here on the 15 minutes time frame, let us look at the movement of price starting from this point. So we can see that price opened at where? 1.24466, came higher to 1.24485, dropped and closed at this level. And after closing at this level in 15 minutes, it opened at 1.24418, pushed up, and it didn't close. Then it dropped all the way to this price point. All right, that is 1.24198. But then the candle melted and came to close at 1.24296. Then again, it opened at this level. So this is a bearish candle, another bearish candle, went higher, came lower, but closed at this point. Then price moved on to a bullish candle. Okay, so you see, from where price closed from this bearish candle, it opened on the bullish candle lower. It opened lower, then price dropped. Okay, so price came low. So from 1.24223 that it opened, it came all the way here, 1.24117, and then reversed, pushing higher and closed. In fact, it came high up to 1.24528, but then came and closed at what? 1.24514, and this is where price closed. So this is how you measure the movement of prices using candlesticks on a chart. Bonus point. Now, this is what I mean when I say that the color of the candlesticks do not matter. All right. Now, depending on how you want your chart to look like, you can edit it in trading view. All right. So let's say I right click and I come to settings, and then I want all my bullish candles to be a particular color. I can do that. So I come to say the symbols, the body of my bullish candles, I want them to be, say, blue in color. I can change them to blue. And then I want the borders also to be blue, and I want the wicks to be blue as well. Then I want my bearish candles to be black. I want their borders to be black, and I want the wicks of the bearish candles to also be black. And this is how I prefer, or somebody will prefer, their chart to look like. And in this case, it is the same concept, but different colors. Okay, so if you look at this particular point, you can see price opened, closed lower, opened, came high, but dropped low and then closed at this point. Opened again, came lower to close. Then a bullish candle. Price opened at this level, dropped to this low, but went all the way high to this point and then closed at this price point, making it a bullish candle. So the color of the candlestick doesn't really matter. What matters is your understanding of how a candlestick looks like, or how a candlestick operates. A bullish candlestick opens at a lower price point but closes at a higher price point, and the bearish candlestick opens at the higher price point but closes at a lower price point. I hope this tutorial helped. Thanks for watching this video. Until next time, happy trading.